Global uncertainty didn't stop us. This week, Systematics placed well over $15,000 for the week. Probably one of our best trading weeks in 2026 thus far. The key thing about all of this was to stay calm in spite of all the ups and downs politically and in the news, and just to focus on the markets. And the reality is that we have been chopping in a range since October. Bears can't break us down below any key levels, and bulls really haven't been able to push us above any particular trend lines. So the reality is that sticking with systematics, sticking with the data has proved to be exceedingly beneficial to us. This year, we've consistently been profitable, even when those profits maybe haven't been just explosive every single week, but they have been massively consistent and allowed us to continue to not only trade our systematics, but continue to expand the type of systematic trades we are taking and the type of discretionary trades we are able to lean into. It takes off the pressure to try to bottom feed on when those software stocks and SaaS stocks are going to hit their bottom, or cybersecurity stocks. And then it just gives us time to say, you know what, I'd rather wait and see until those solid bases come in and we really start to see some positive activity, that then I can really lean into my trades and really set up some longer duration discretionary trades so I can participate in the bullish uptrend that generally just takes place year after year. Now, we've had 3 years of massive returns. So if this year doesn't produce those same returns, no love lost. The reality is that there are hundreds of different kinds of trades that are productive. And so there's no reason to wait around for the market to give you money freely. Now, the last couple of years, you could have picked basically any stock. Stocks were going up and you would have done probably really fine. But in these types of markets where you're moving sideways and you have to keep things tight, you really need to know which stocks are going to have breakout moves that are sustainable, which ones have breakout moves that are consistent in time formations, and then what other kind of time-based trades can you participate in. Now, our statistics on the systematics go back 5-6 years. We've been trading them since I have been actively trading options as a full-time trader. And so essentially we are giving those to you inside the Discord. For those who aren't part of the Discord, you might want to consider joining, because the reality is that we are giving you these trades every single day. If you are not able to take 2 or 3 really solid trades a day, it's because maybe you have other time constraints that don't allow you. But even if you're only participating in 1 or 2 of our key systematic trades, you should still be pulling $2,000, $3,000, $4,000 out of the market every week if you are above the PDT rules. So the reality is, with options trading and multi-leg options trading, you do have to have a margin account. You do have to be above $26,000 to be able to participate in those trades, because a lot of them are 0 DT. Not all of them are same day expiration, but some of them are, and some of the best performers are. So I don't want to gaslight you. I want just to make that very clear up front. But the performance of these systematic trades has just been outstanding. Now, last week, some of you might have remembered that because of the fact that I felt like we were just talking a lot about systematic trades and the same systematic trades, I did focus a little bit on some other trades that we were taking, and specifically some of the mining and metals stocks that we had participated in and some of the commodity stocks. And then on the other side, I talked about the versatility of using double diagonals to trade in range-based weeks, months, and years. And so we talked a lot about how to manipulate that to change them into credit diagonals or into debit diagonals. And that might have felt like a lot. However, there were a couple people who went back and really rewatched that section of the video. I can see from the YouTube stats or whatever that some people really went back and watched that section multiple times. And because of that, I was not surprised that inside the Discord this week, we had a couple people who behind the scenes were really trying to think through how to utilize this kind of trade setup. So I really do, before I get into what the returns were, or actually let me just share with you what the returns looked like for the week. Let's just get this started. And so I do want to show you. So this week you can see that the returns on the trades, and this is literally, if you open the trade and you just let it expire out the money, you did nothing. You opened the trade and you never ever managed it, right? You just said, you know what, I'm going to put it on, I'm going to let it go to die at the end of the day, and whatever it settles at, that's the money I'm going to make. You still would have made well over $16,000 for the week. However, I do want to point out that for people who manage the trades, you may have even made nearing $25,000 for the week, because a trade like this, which its net credit was $6,000. So that means that you receive upfront in your sell to open $6,000, had a high of 20%. So that would have been you would have made $1,200 on that trade if you would have just put in a stop profit. And that is something we talk about. It is something we teach to allow people who are over those PDT rules and really can manage trades that allow them to be able to really take those profits closer to their peak instead of just letting things roll over at the end of day. Because this trade, I believe it's this one, is hilarious. The trade was up 52%. So again, on a $2,500 trade, being up 50% means that you have sold to open for $2,500, you are up almost $1,300 in the trade. And that was at 9:05 p.m. Now, 9:05 p.m. is about 1 hour before market close, my time, and in Europe. And so that means that I was up $1,300. And if I would have just went to bed early, I would have ended the day with this crazy loss. I would have taken a loss of $2,500 at the end of the day had I not added any stop losses or any kind of protection. It doesn't make any sense. Once you are up something like 50% in a trade, because when you are selling to open, your trade is decaying. So what you're really looking for is that sell high and buy back lower. So even if I would have just put in a stop profit at 20 or 30%, I still would have been able to walk away from something if I just didn't want to watch this trade. And yes, I did say go to bed at 9 p.m. because I have 2 really small kids. I get up at 5 a.m. every morning. So there's some days where I'm like, can I just go to bed early? But I promise it almost never happens because I always have to be around for our systematic trades for market close. So I never go to bed that early. I wish. But all right. So then we can keep going. Now, this is a trade that I wanted to point out. And sadly, in option strat, when you close trades, it doesn't really keep them open for you to see. So I'm going to go into the Discord. And then if you guys come into the section called double diagonals, you will see the trade that Jackie sent us and her trade idea. So let me just go back up to this and see if it'll let me. Oh, did I not? I thought I got a screenshot of it. Apologies. Here it is. Let's see if it will let us see something. Yes. So she saved this while it was still running, but it's not actually showing us the entire trade. And essentially her idea was that, so she actually set up a double diagonal. And so essentially what that creates is a bunch of debit spreads up and down the chain. And what happens is because you have 2 sets of debit spreads. Now, for those that don't know how a debit spread works, usually with a debit spread, you are buying the call that's closest to the money, or if you're expecting a downward move, you're buying the call closer to the money and then selling the call further out. So if your spread is, let's say, 15 points wide, and you buy to open is 15 points wide, and you buy to open that, let's say you pay $3 for the trade, you can make $12, which would be $1,200 per debit spread. So essentially what you're saying is, I think that the price can move down to a certain point. So I don't really want to be paying for a put for price action to go all the way to 0, because I'm not expecting it to go to 0. I'm just expecting it to go down, and I want to capture the price action of where the price is actually moving to. And then you can also do that on the call side. Now, when you have a lot of volatility, the great thing is that those short positions that are further out the money are worth so much money that it really reduces the cost of entry on those debit spreads. And the other reality is that with your debit spread, you are actually, with your debit diagonals, you have slightly different expiration dates on the long and the short. As you can see here, her long positions were all expiring on the 9th, so this coming Monday, but all of her shorts were expiring on the Friday, on the 6th. And so basically what this creates is basically these tents that at any point that the price moves down or the price moves up within a really nice range, you are starting to make a significant amount of money. Now, if she had just left this open through the weekend, the trade is only up $3,700, but we did close the trade out on the Friday and that was up $4,200. So a trade like this, and it is showing you now a net debit of $11,000, but that's not what it actually cost to enter. Let me see if I can find the original posting. So option strat does update. So that's, you're not going to see the original cost of entry, but here you can see it was up $4,900, which was almost 200% return. So that demonstrates to us that our initial investment was really close to about the $2,200 mark. So to put on this trade, you did need to have $2,200. And for a lot of our members who have been growing their accounts with systematic trades, they do end up in this situation where the systematic trades are only requiring them to utilize $3,000 or $4,000 a day in their accounts, and their accounts have quadrupled, have 10 times well over their initial capital amount. And so they have this portion of their account that they may have been utilizing for discretionary trades, which we're not doing as much of because of the fact that we're just so range bound. They can utilize these weekly strategies and bi-weekly strategies. So they're setting them up for 2 weeks out, 14 days expiration, and they can let those kind of sit and bake. But this is not a bad return. If you have a $30,000, $40,000 account and you take $2,200 of that and you place it into this strategy and it's giving you almost 200% return, I don't think you're going to be entirely disappointed, especially because this trade required no management. She just had to open the trade on the Friday before last, and she just stayed in the trade until Friday. And then on Friday, she had to decide when she was going to close this trade. And then she did share the trade with all of us, which was very nice. But this wasn't the only successful trade that had been shared with the entire group. Shout out to John, who also came in and shared with us a double call side calendar. So one of the things that you can see is there's a lot of versatility to how you can set up these trades. If you feel like your risk is mostly to the upside, that because of the fact that bears have not been able to break down the S&P, you may feel concerned that if we get a squeeze to the upside, if we just get some good news about Iran or some good news about Israel, some good news about the United States and its position in Iran, or we get kind of solidarity around Iran that forces a de-escalation, or we open up the Strait of Hormuz, just like some positive news that we could easily see 7,000 in like time, then this is a great way to just play the major key levels on your way up to those levels. And then you kind of your risk, because a lot of times people think about hedging by selling a lot of downside. And sometimes when you're selling positions, those short positions, they don't necessarily make that much money depending on how you set them up. So this is a really great way to set up a very simple trade. It's literally costing him $390 to do this trade, but the max potential profit is nearing $5,000. And oftentimes I tell people, look at your max potential profit because it's like unlikely to hit. So you want to really look at like the ranges that you're going to make money. But this max, like near max profit, has an extremely wide range. It's anywhere above like 20 all the way up to 70 to 30. It's a massive range of like points where if the S&P is anywhere in that range, you're making anywhere between $2,000 and $4,500. I think that kinds of asymmetric risk rewards are just brilliant, and the fact that like are designing these on their own just based on the education that they're receiving is probably one of the most important aspects of what we do at the Trade Speakeasy. Because yes, my systematic trades are my systematic trades that I've traded for 6 years. It doesn't mean they're the only good trades that exist in the universe. And it doesn't mean that you can't design trades that are actually better suited for your potential portfolio. Because let's say, for instance, you have put on a lot of downside positions because you were expecting price to break down. And now you're starting to wonder, are any of those actually going to perform? This is a great way to say, if none of my downside positions were perform because we don't actually get that push to the downside, I don't care, because this trade by itself could easily give me a 400-500% return, and it will end up cushioning whatever I have diverted to putting on maybe some very aggressive hedges because of my fears of what's going on in the politics. Using multi-leg option strategies just gives you that asymmetric risk reward. You're not like yourself out there with a lot of naked long puts and naked long calls that are costing you thousands of dollars, because right now the put skew is so high. You are paying more than 400 times the normal price of a put. If a put was normally $4, right now you are paying nearing between $16 and $20 for the same exact put. And if you're not getting the downside move you're looking for, which a lot of people are not, then you are just burning up cash. And one of the things that really frustrates me is that people will screenshot you their returns when their returns are in those like points of, oh, everything is green because we maybe had a gap down. And they don't show you their returns when every single day all of the indexes have closed their gaps to the upside. So whatever money you made, if you didn't manage to close it straight at the open, you gave back a lot of the kind that you saw. And those screenshots, sorry to say, I've been watching people who are just gaslighting audience because they're showing 20 different kinds that they're in. All of them are up 20 and 30%. They're making it look like they're making tens of thousands of dollars. But literally they screenshot it exactly at the open. And unless they manage to close every single one of their positions right at that bell, they were not making those returns, and they're just talking nonsense. And, you know, I do feel sorry for people who are not sorry in a degrading way. I feel sorry that a lot of people will show you returns that just don't exist in the universe, and they don't explain it. That's why I show you, this is what our returns would look like if you never managed the trade. If you opened it and you just left it to die, this is what you would have gotten. Why? Because a lot of people who are learning to trade options and multi-leg options, they often know how to open the trades, but they feel very paralyzed in knowing when to close the trade. And yes, we try to give people as much kind in the thought process as possible so they can squeeze out the best out of each of the trades. But what I want to demonstrate to people is, even if you're at the very beginning of your journey and you do not know how to close trades, you will still actually know how to make money. I am not showing you all of the trades if I would have closed them at the exact perfect moment, because you will be very unlikely to catch that very top and catch that very bottom A, B, C, D. And so if I send screenshots, I'm not sending screenshots at like best performance. Even the end of day trades that you see are green, often 1 hour earlier, those trades were 30-40% higher in their value. And I'm not showing you those managed returns, because managed returns do take acumen. They take time to learn your charting, to understand the Greeks, and to be available, to be sitting in front of your computer, to be able to catch those high returns. And not everyone is able to do that. And we understand that. So that's why we are showing you the returns based on someone who is at a desk, I'm at work, I'm in meetings. I can manage to step away for 2 minutes to open a trade because I've organized my schedule to know that at exactly this time, Suzanne is going to send out a signal. I want to be able to participate. But for the rest of the day, I have people who are doctors, nurses, lawyers. I have people who are in hearings the entire duration of the day. They can step away for a moment to open a trade, but that's all that they can participate in. And I always have to be cognizant of those members and not gaslight people saying that, oh, your returns would have looked like this. Because no, if you cannot manage a trade, your returns would not have looked like that. And you're not just sitting around from literally 9:30 a.m. EST all the way to 4 p.m. EST. Most people have lives. If not jobs, you have children, you have activities, you have other stuff going on in your life. And you don't want to be sitting at the computer for 9 hours a day. So I just say that because the last couple weeks I've seen a lot of people posting wins. And I'm certain that even though that may be that guru was getting that particular return, but I highly doubt that the people following their call outs or following their trades were able to hit those exact profits. And so, just want to point it out that actually when we're showing you our returns, we are not showing you our best results. We are showing you the results that a normal person with a normal life could achieve if they were trading with us in the Discord, which I think is much more appropriate than trying to create a bouquet of plastic flowers. So all that to say, I'm super proud of our members. I'm super proud of the people that went back and rewatched that section, that found the educational video, that partnered with this, went back and rewatched that, and then started to figure out how they want to trade the double diagonals. You can play double diagonals on both diagonals on one side of the chain, so both call side trades, or you could turn them into downside trades. So you could play two put side diagonals, or like Jackie, who set up two put two call side in order to really widen out her range. You could have done it that way, or you could have taken the trade like I did, which was a put side diagonal and a call side debit diagonal. But like I said, I'm super to see how the members are taking the work seriously, going back, learning, really sharpening their tools, engaging with the trades, engaging with the thought process, asking questions. So if anyone is in the group and they feel lost, they feel confused, we all start there at some point. But the only way to kind of pass that hurdle is not to give up and then just keep asking questions. Get engaged in the group. I'm telling you, the people who are the most noisy, interactive, engaged in what's happening inside the Discord are the people who behind the scenes are really the heavy hitters. They are taking these trades and manipulating them in a way that allows them to get the best out of their entire portfolio. So please don't give up, keep trying. And for those of you guys who will see this in the free Discord, you might want to consider joining, because soon we will be rolling off monthly membership, and we will only be giving people access as annual members to the Discord. So if you are interested in learning and participating, I would very, emphatically, I would emphasize that you do not want to just sit on this situation, because you will not be able to, the word that I'm looking for, opportunity may very rapidly pass you by. So if you want to get involved in the monthly access to the Discord, then you want to sign up as soon as possible. And the link is always in the bio. And if you're interested in these kinds of videos, you want to see more about we're trading and how we're trading it, and have more educational feedback, subscribe, but also in the comments, let us know what's interesting to you, because we're looking at what we can actually provide to you guys, what that would be interesting for you to watch. And we want to provide what is good for you guys, and not just to be producing content. So let us know what you think, and let us know what you guys have learned, and we'd love to hear from you guys. All right. Bye for now, friends.